So, as the title suggests, I'm going to be bringing €300 deposit up to 100 grand. I'm going to go through everything. I'm going to go through my strategy. I'm going to go through my statements. I'm going to go through my trading journal. I'm going to go through my Telegram group where I plan everything out before I do them to prove that I actually get into everything. I'm going to show everything, complete transparency. If you want to see timestamps, go to the bottom and you can go to any part of the video that you like. You can go straight to the strategy, whatever else. Look, this video is long. It's going to be, I don't even know how long it's going to be. It's probably going to be like 45 minutes long. And the reason is because I need to explain the strategy in a detailed fashion. Okay, if you do not have the patience to watch this entire video, then you will not have the patience to apply this strategy, because it's based off of a bit of patience. But if you have patience and you have a little bit of understanding about trading, you know, about market structure and a few other things, again, we get into that in the trading side of things, then this could work really well for you. Okay, so what is the plan of this series? Okay, so this is series 1. This is series 1. This is episode 1, whatever you want to call it. I'm going to be going over what I've done so far. I've started with 300. I didn't want to start until I had a score on the scoreboard. And every single week, probably every single Sunday, I'm going to do a full update, full transparency, show you all the statements, show you my journal, show you my trades, show you the Telegram group to show you that I actually planned these stuff out and I actually was in them. Everything. Okay, if you like the transparency and if you really want to see what it's like to, what's possible when you do become profitable as a trader, give me a subscription, give me a follow, give me a like. For the transparency, I'm not here to shill or sell you anything. I don't sell a course, anything like that. I'm literally here to show you what's possible, because there's a lot of people in this industry that just want to make money off you by selling you a course. I don't do that. I make enough money doing this right now and I'm happy. So I want to show you the true real experience of this all, show you the ups and show you the downs. So as of episode 1, I just want to kind of set the stage. Not every single one of these episodes or recaps are going to be this long. It's setting the stage, okay? So to, I suppose, get into the swing of things, I am about 3 years, just over 3 years of trading, a year and a half profitable. I will go into the strategy, as I said, timestamps at the bottom if you want to go to it. But I trade supply and demand. I have my own way of trading it, and I've been profitable for the past year and a half trading it. When I started to become profitable, I was profitable with very small amounts, like a few hundred every few days. But then I unlocked the holy grail of funded trading programs, and I made a lot more money. Traded exactly the same way. The only difference was I had more capital. Now that I have traded on funded trading accounts for 6 to 8 months, I'm not really sure how long I've been trading with them, I've gathered enough profits, but I want the security of having my own personal account, and that's the point of this series. You get to see me create my personal account. I will show you everything, all my withdrawals, all my profits, all my losses, the good, the bad, the ugly, everything. Okay, again, if you love the transparency, make sure you give me a follow, you subscribe, and you turn on that notification bell, because if you are interested to see what's possible, I'm going to show you. Okay, so to start off, this is my free Telegram group. If you want to just see my weekly recaps, like you're seeing right now, you know, see my weekly statements, which I am going to show you, show you my trader journal, which I am going to show you, then you can just do that. But if you want to get a bit more personal with me, you can join my free Telegram group. The link is going to be in the description. Here I give my trading ideas. I share everything. Honestly, probably too much, but full transparency. All my trades, everything I plan out, my account balance, every single trade. I show my statements. I show, like, okay, just keep in mind. Remember now, I said that I was when I'm going into, and I'm going to be showing you examples of trading, adding to a trade. This is one of them. Okay, this is one where I added to a gold trade 3 times and made insane profit out of it. Secured my profits, made it super safe. But again, this is how a lot of people will be like, oh, the only way you can do what you're doing right now is because you're over risking. It's not true. The only way I'm able to do this is because I find good trades, I add to my winning trades, I secure profits, And instead of, let's say, you know, there's a lot, again, I'm going to show you a few examples. Instead of, let's say, making 200 or 300 from a trade, I end up making 800 or 900 because I add to a trade. Again, a strategy that I will show you when we get to the strategy section. For instance, like everything is shown here, guys. Absolutely everything. All my thoughts, all my plans, all my trade ideas before I do them. Absolutely everything. And I've been doing this now for a while now, for over 2.5 weeks, showing you all the profits, all reference numbers, everything, showing all my profits from my funded accounts. I do Q&As with people if they want to learn more. Again, guys, everything, full transparency. If you want to see that, Telegram group in the description. Okay, so I suppose just to kind of quickly go over, so week number 1, so as I said, we started with a deposit. So let's go over some of the receipts before we go into the strategy. So as I said, week number 1, we started, my previous balance was 28 euro. I basically had, but when I started with the funded journey, I removed everything. I said to myself, do you know what, I'm going to go fully into the funded challenges. I'm going to make some money out of that, and then I'm going to go up and go to into a personal account and create a personal account. I want at least 100k personal account that matches my funded accounts to have that security. Okay, so this broker is called TD365, all right? So just to show you, these are where these statements are coming from. This is my preferred broker. I love them. If you want to use them as well, I have a link in the description. They have the best fixed spreads in the market. Best. So like their SPX or SPY, Jesus. They're basically SPY 500, their NASDAQ, US 30, like a 0.14 spread. That's crazy good. Like even on like the like Euro USD 0.6 spread. If you find one with better spread, let me know, because this is the best one I've seen. They have insanely high leverage. You cannot go into negative. They will not let you go. You can never owe this broker money. I genuinely know deposits take like literally, if you deposit with a credit card, it'll be instantaneous. If you want to withdraw, which again, I show all my withdrawals as well, literally will take a day, maybe 2 days max. Best broker, lightning fast entries, super, like, yeah, honestly, best broker I've ever used. Okay, these are the weekly statements they send you, all right? So the entire weekly statements. Everything is here. Okay, so you can see here previous balance was 28 euro, deposit 265 euro, so we were just under 300. Okay, but our first week's profit was 2041. Account balance was standing. You're probably saying, oh Rob, you were definitely trading with like 15 contracts. No, 1 to 2 contracts, that's it. 2 contracts, 2 contracts, 2 contracts, 1 contract, 1 contract, 3 contracts, 2 contracts, 1 contract. Nope. The way I trade is I have a set limit, a set risk, and I add to winning trades. Okay, so if I was going to risk 50 euro to make 150 euro, I will add to a trade, and instead of, let's say, earning 150 euro, if I add to a trade multiple times, I could turn that positive trade of 150 euro into 500 or 600 euro, still risking exactly the same amount. How do I do that? Wait till I get to the section afterwards where I show you my strategy, but it's all there. That's how you compound it fast. You don't compound a small account by risking and over risking. You compound by adding to winning trades and compounding your wins, not compounding your losses. Okay, so that was week number 1. So again, statement 14th of January. So today's the 26th, 21st. I said I wanted to at least have 2 weeks before I showed this video off. Okay, so 21st, 14th. No, excuse me. Our first trade was placed on the 11th, which was a Wednesday. So we had 1, 2, 3. We had 3 trading days last week. This Monday was a bank holiday, so there was no trading on that day. And then we had 1, 2, 3, 4, 5, 6, 7. So 7 trading days. Keep that in mind. So last week we had 3 trading days. We got a beautiful setup on gold. I'll go through. I think I'm going to be using that as an example on how to trade, how to use my strategy. But I added to that trade, and it was crazy profit. This is this week's. This is this week. Okay, a little bit less profit. We had a few things that went. Well, actually, there was one thing that kind of went wrong. And I went into my, in my WhatsApp, or sorry, my Telegram group, I went through it. I accidentally added a trade with 30 lots instead of 3. Yeah, that was a bit of a loss that I shouldn't have taken. It was a €360 loss on one trade. My risk is not that big. My risk is normally, like, at the moment it's at €100, anywhere between 100 and €150, and I almost tripled that loss in one trade because I made a stupid mistake. Look, it happens. It's one of those easy things to make when you're trading and you don't realize. And the thing is, on this broker, I'm going to log in, but I'm going to do it on the other screen. The problem is that it's very easy to set trades on this broker because it's very fast execution, and that's one thing I really like about them. But look, I just added a 0. It is what it is. But when I trade, I don't look at my profits when trading. Would you let me log in? I don't look at my profits while trading. I look at my points, because psychologically, looking at points as opposed to seeing something else, it's just much better for my psychology. Okay, so let's bring that over here. So this is what it looks like. Okay. So when you're in a trade, okay, see the section, this is what it looks like. It's all web-based as well. So if you open up your charts, as you can see here, I have everything kind of, all the trades I've been taking. But the way you trade is you click this button here, and literally I just did this by accident, and you can set your stop loss, everything, before you enter a trade. It's very, very, very quick. It's beautiful. And all you do is just click buy. That's it. And you know, it's very, very quick. So I put a 0 there by accident. And the thing is, when I enter trades, your trade comes here, and you can have open P&L in points, excuse me, or profit in money. I had it in points. So I was down like 15 points. I was like, oh, that's grand, look, €150, €100 grand, doesn't matter. And then I realized I was in 30 lots. Anyway, look, it is what it is. So this is the group. As you can see here, we're at 2,700 at the moment. Why? Oh my God, Rob, you lost money? No, we had an €800 withdrawal. So minus €800. I withdrew €800 last week, just as a, so this challenge is 1,000 in accumulated fund profits, okay, with only one deposit. So I'm not going to be stopping this challenge once I hit 100k in my account. Like when up here it says 100k, it's 100k accumulation. All right, and again, I'm going to show all that. So last week we made €1,250 profit, which is extremely respectable for a small account. Like let's not be under any delusion here. It's a very, very good. So if you look at my report, so this is my online trading journal. Okay, honestly, probably one of the most important things you could ever own is a really, really solid journal. And the reason why I went with these guys is because if I click add trade, import trades, I can go on to this, okay? I can go on to transactions, transaction history. By the way, look at that trade. 2 lots, €553, 1 lot. Lads, yeah. Anyway, look, go on to view, click 1 day, all, and then you can basically, all trades, download. It'll download a CVC file. Click browse, and you can literally add it in here, and it will import all your trades for you. And then everything is here. You have all your trades. You have, like, so we've accumulated returns of 3,400. I took €800 out. I have a profit factor of 1.66. I have a win rate of 63%. Balance at the moment is here. Obviously we went down because we took money out. And here's all my trades. What's amazing about this software is that it tells you hour by hour your profit, day by day your profit, and it will tell you literally if there's times that aren't really good. Like at the moment, between 9 and 10 o'clock in the morning is the time where I lose the most money. 12 o'clock I lose money. So you can look at this back after, like, I will need a lot more data to confirm this, so I'm looking for at least 2 to 3 months of data before I take any of this into consideration. But I can look back and look at literally all of my overview, and it will tell me what days I should be staying away from, what hours I should be staying away from. It'll be like, hey look dude, why are you trading Asian session? You have never made money in Asian session. Here's all the proof. So then you don't trade Asian session. And you can see here my profits, accumulated returns every day. So first day, second day, third day, fourth day, fifth day, sixth day, small loss, back up again. So you can see everything, all right? amazing. If you want to use this yourself, and I recommend this because it's the only thing I found that connects to TD365. Can you use a trading journal like Excel or whatever? All power to you. Try and program this stuff into Excel. I've done it. It is a pain in the bum because you have to import all your trades manually. Where this, boom, done. I like my time, so that's the way I do it. So if you want to use my broker TD365, the link is in the description. Highly recommend them. If you want to use my trading journal, link is in the description. Highly recommend them. I always have to remember this. Success leaves clues. Failures leave clues also. If you're not tracking your trades and you do not know what you're doing, dudettes and dudes, this does it all for you. It literally takes you to go in here, download all trades, import, done. All the data you ever need is here. You don't need to waste time in Excel. You don't need to do any of this. Yes, of course, it costs money. But again, in my mind, this data, this information is amazing. It tells you how long you're in trades. You can set up like the strategies you want to use. It is crazy in depth. I'm still like, you can like, this is what's even cooler. You can literally click on your trade. Okay. You can go down and you can see the trade, where you entered, where you took your profit, where your target was. That's awesome. So you always have a complete journal of what you're doing. I'm super excited to use this, and I'm a sucker for stats, and I'm a super lover of Excel, but this was another level for me. Like, but anyway, as I said, if you want to use the same stuff as I'm doing, it's all here. If you want to follow along with this journey, it's all here. This is how a week and a half has gone. It's not even 2 full weeks. I've been doing very well. But remember, I've been doing this for a long time. I've been profitable for 1.5 years. If you want to follow my journey and you want to follow absolutely everything from start to finish, all my trade ideas, if you want to get trade ideas, if you want to ask me questions, if you want to know what I'm trading, how much I'm making, all my receipts, everything beforehand, everything is in here daily. Every day I go in here and I say, this is what I'm planning on trading. These are the zones I'm looking at. Like, this was the gold trade that I'm going to show you an example of. Everything on the fly, when I was in profit, when I was taking profits, when I was adding, everything. So if you like the idea of that, free group, it's there. It's a journal. It's my online journal. Okay. But now I'm taking this step further and I'm putting it in front of even more eyes. Every Sunday I'll be doing a weekly update of how this is going, and that's pretty much it. Okay. So now we're going to go into the trading strategy. Okay. Right, so let's get into this strategy. Here is a write-up of exactly how the strategy works. If you want, you could take this down, or whichever. Some trading plan and key mistakes to avoid. Okay, so first thing you need to do is check the news. Check if there's any news. Okay, this isn't a news-based strategy or anything like that, but you need to make sure that there is no news, because if there is news like core CPI or PPI or jobless claims or something, and you're in a NASDAQ trade or USD JPY trade or something like that, you could be 100 points in profit and then boom, in 1 minute you could be taken out. So be very careful. So how do we do that? Loads of different websites, but I like forex.com. This is like, for example, this is January 18th. All you have to do is look. Is there any red or orange envelopes? Okay, folders, not envelopes. If there is a red one, look at what the currency is. If it's USD and you're trading NASDAQ, any USD pairs, so USD JPY, USD whatever, at this time, get out of the trade. Don't be in the trade 15 minutes before or 15 minutes after. Just be careful of that. Like, for instance, red CPI, tongue twister, JPB. If you're in any of those pairs, it's going to go wild at this time. JPY pairs, it's going to go wild at this time. Just be aware. Okay, like if you go on to certain days, that's just an example of a really news heavy day. But Again, for instance, let's say if we go to tomorrow or Monday morning for me, there's no news. There's some Euro news, but it's an orange folder, medium impact. Any of these folders, forget about it. But just be a little bit aware of the medium ones, but the red ones, be aware. Okay, that's number one. If there is a red folder, you just have to be careful. Okay, if you're in a trade and it's working out really well for you, it's probably a time to just cut your profits, or if you're in a loss, cut your loss. Never hold through a trade, or never hold through news unless you're really advanced. You know what you're doing. You have a broker that doesn't like make your spreads the size of bloody Africa. You know, just be careful. Okay, so number one, check the news. Number two, we need to look at the higher time frame and determine the direction of the trend. This is not a counter trend. Okay, when it's going up, you trade up. When it's going down, you trade down. You don't go, it's going up, is this a short, is this a short, is this a short? No, this isn't a counter trend strategy. This isn't a ranging market strategy. So you need to also have a basic understanding of market structure. Okay, so you need to understand what a higher high is, a lower low is. You need to know what equal highs are, like, you know, double tops, triple bottoms, just so you have an idea of market structure. Okay, if you're seeing triple bottoms and triple tops and it's bouncing like this, well, that's a ranging market. And one thing to be really careful of, in days where there is massive news the next day, usually the previous day will be a ranging market, because the market is undecisive. It doesn't want to make a move because people aren't willing to buy big until the market, it's either good news or bad news. Okay, never trade like a long just because it's good news. Never trade a bad because it's bad news. Trade what you see on the charts. Okay, but again, this goes back to news. Just be careful of the news, that's all. Especially if you're trading NASDAQ or US 30. This strategy works on every currency pair, every indice, gold, commodities, everything. Okay, I'm going to show you my examples on gold, but just be super aware. Okay, not counter trend, not ranging. This is one simple strategy for trending markets. Now that we've over explained that, let's move on. Only take trades within this established direction. Use the 200 period moving average to confirm your bias. If we're going up on the 1 hour, if we're going up on the daily, and if the 200 period moving average, okay, this is I don't use this indicator to trade as per se. I don't trade off of it. I just use it as another confirmation of my bias. If on the 15 minute we're on a downtrend, and on the 5 minute we're starting to slowly downtrend, but on the 1 hour and the daily we're still above that 200 period moving average, I'm still looking for longs. Until we clearly break underneath that and we start forming structure underneath it, then I will look for shorts. It's just a much easier way of trading. Okay, you don't have to then like work on like any other thing except, you know, we're going up and we're above the 200 period moving average. Okay, I will show you that in a second. Lastly, we need to identify key areas of supply and demand zones on the 15 minute or the 1 hour time frame. Okay, I will show you what they are, but demand zones and supply zones are just areas where we're looking for a pullback to, because this is primarily a pullback strategy, and we're looking to trade from those areas. Okay, so what I normally would do at the start of the day, or what I'll be doing at the start of every single week, is I would look at a bunch of currency pairs. I would look at indices, I would look at gold, and I would mark them up with the strategy I'm going to show you now, and I will just wait until they'll come to these zones. I don't trade market opens, I don't trade this, I don't trade that. The great thing about this strategy is that you just mark up your zones, you set your alert, and you walk away. When an alert goes off, and it's like, oh, an alert went off on USD JPY or whatever, you click on that currency pair, you look at it, you will see if you get my entry criteria, you take the trade, you walk away. Okay, this is what is freeing with this strategy, because you can trade it at literally like any time. All right, so we will identify our areas where we want to trade from, which are called supply and demand. We will to take an entry, we wait for a price consolidation on the 5 minute time frame in our identified zones, okay, for at least 10 to 15 minutes for the best entry. No aggressive entries, meaning if we come back to our zone and just fly straight back out, nah, I don't do those trades. It's just too aggressive. It moves too aggressively fast for me. I need things to slow down before I take a trade. Okay, once we have that 5 minute consolidation, we place a buy limit order right above the consolidation if it's a buy. If it's a sell, we place a sell limit order underneath the consolidation. I'll show you that again. And then when it breaks out in that direction, we get entered into the trade, okay? We don't wait for any other pullbacks or anything like that. We've already got our pullback to the demand, okay? Or our supply zone. Another thing you have to be careful of, aware of, is the idea of what's called liquidity. Liquidity is areas where buyers and sellers are building up orders, okay? And sometimes on these zones, these supplier demand zones, you can get wicked out, okay? It's just how the market works, okay? Sometimes you might get wicked out, but if that happens, you can enter again. Again, I'm going to show you this, but normally what happens is, let's say it either comes back to the zone, consolidates, breaks out, we have an entry, or it comes back, consolidates, wicks the area with a massive wick, but no body of the candle closes outside that zone, we can still trade it in this exactly the same way, okay? So if you get taken out, but it comes back in and consolidates in the zone, you can take the trade again, all right? Again, he likes there, if a wick forms underneath the demand zone or supply zone, but no candle closes, this is a very strong entry. That actually makes the entry incredibly strong, because then the liquidity, the orders have been taken from underneath. Okay, the market moves based off of orders. I think it's kind of obvious and saying. So if that's the case, the banks and the big players are trying to use your orders, the buys, the sells, the stop losses. So if it doesn't get enough orders within that order block, or sorry, the demand zone, it might wick everybody out, take all the orders and fly in the direction. But again, I will show you that. Then what we need to do is identify potential take profit areas, and once we hit our zones, we take profit, obviously. What I like to do, and what most people should do, is I usually take 2 take profit areas. Once take profit area 1, I'll show you how to identify them. When 1 is taken, we move our stop loss to break even. We've taken half our profit, our stop loss is at break even, and that's it. Alternatively, you can trail your stop loss. You won't take any profit, you just trail your stop loss up underneath each new demand zone that's forming on 5 minute. I will show you that. If you're super advanced and the trend is really strong, instead of taking partials, you add to your position, okay? Add to your position at each new structure forming as it goes up. I will show you that as well. Huge mistakes, okay? Remove the 1 minute time frame. This isn't a scalping strategy. We're looking for 50 to 100 points on each trade. If we don't get that, that's it. We just move on to the next trade, okay? If you're part of my free Telegram group, you see that daily I'm catching big moves. You can get a big move every single day. Well, okay, that's actually probably wrong. You can get a big move most days, at least 50 points. And in my Telegram group, I show all the proof. And as I said at the start of this video, I've shown you the receipts as well. It is possible. Once you set the trade, all my trades are set and forget. I don't stare at the charts being like, looking at every 1 minute fucking candle. You'll drive yourself loopy if you do that. You need to enter the trade, set your alerts, walk away. Walk away, play a video game, talk to a friend, go to the gym, live your bloody life. When the alert goes off, then go back to the charts. Don't watch every 1 minute piece of price action. You'll drive yourself demented, and what will happen is you will take profit early because you get spooked, only for it to go all the way in your direction. Okay, don't fall into that trap. Never move your stop loss. If your stop loss is there where it's made to be, you can always re-enter. And if you get stopped out for X amount of points, you can always re-enter, okay? Like I was saying, you can always be wicked out and used as liquidity, but you can jump back in that trade, and it just makes the trade even stronger, all right? But I will say, if you get wicked out once, and if you get wicked out again, I would stay away. Market's playing with you. Look for another demand, look for another trade, okay? But just use maybe 2 as a rule. Always take partial profits as your potential take profit areas. I will show you that. Never over risk. If you don't know how to manage your risk, I have literally videos on how to do that. How to manage your risk, how to calculate your lot size. That's all up to you. I'm just showing you the strategy, okay? So let's go on to gold, and I'm going to show you the strategy very, very simply, okay? So again, we're going on to the higher time frame. I'm going to do this quick fire now because we've already explained it. So we go on to the daily. I'm going to show you the indicator actually first. So I have SMA and EMA. That's the only indicator I really look at. I'm also going to show you one other indicator that might help you identify supply and demand areas a bit easier, okay? Remember, supply zones are areas of aggressive selling. Demand zones are areas of aggressive buying. And the whole thinking process behind it is that at these areas where there was a massive order placed and the price spiked, those people, whoever put that order, the bank, the institutions, that person that has too much money on their hands, they didn't get fully filled. So let's say they put down 100% of their position, whatever the hell that is, 60% of their position was filled. It caused the price to fly up. But what happens is their order is still there, the last 40%. So what happens is the price goes up and we're hoping for it to come back down, tap and explode back up again to fill in the remainder of their order, okay? What that does is we're riding the wave with them, all right? Whoever those people are moving the market, all right? So the first indicator is the SMA and EMA, okay? If I click on it, here are my settings. Everything is turned off. I just have EMA1 set to 200, which is exponential moving average. Style, everything turned off. EMA1, 0 color, green, red color 1, or color 1 red. All that does is when the 200 period moving average is underneath, above the price, it goes red and green below. Very clear indicator to tell me we're still in an uptrend. We're in a downtrend. We're in an uptrend. Go to the daily. We're in an uptrend. Higher highs, lower lows. Go on to the 1 hour. I only use the daily 1 hour, 15 minute, 5 minute. Okay. 1 hour above the period moving average the whole time. Higher highs, lower lows, higher highs, lower lows. We do get pullbacks, but we keep breaking structure. Higher highs, consolidation, but we're still above the 200 period moving average the whole way. Okay. Until it clearly breaks below on the 1 hour or the daily, I look for buys the whole time. If let's say at this point, like, you know, right here, okay, we crashed down here, that would turn red. We came back up, we crashed back down again. Now I'm looking for sells, but I'm only looking for buys, okay, because we're going up. For looking for a short, you're going to do everything I'm saying right now, and you just do it in the opposite fashion, okay? So I'm going to show you everything. These are the trades that I took this week on my personal account that I showed you at the start of this video. These are the exact trades I took, okay? So I'm going to go back to the first one I took and basically show you exactly what I do. So this is how I looked at this week, okay? So last week, this is practically where I started. I opened up the chart, I looked at the daily, looked at the 1 hour. We're going up, I'm looking for buys. I go on to the 15 minute and I look for a supply zone, okay? Sorry, demand zone. Remember, demand is an area of aggressive buying. So we're just looking for big candles to the upside. That's it, because we're looking for buys because we're above the 200 period moving average. And on all time frames are going up. If we're in a trending market, stay away. Go to, this is gold, go to silver, go to oil, go to something else, go to USD/JPY, go to NASDAQ, whatever. Just stay away if it's a trending market. How do you know that? I'm going to show you an example up here. So we're looking for a break of structure to the upside with aggressive buying, okay? If you're looking for a sell, we need aggressive selling to the downside, breaking structure. What is structure? This is the highest high that the price has reached to this point. This was the highest high, okay? We're looking for aggressive buying up on the 15-minute time frame, a massive green candle. Obviously, my candles are yellow and white. I just like those colors because psychologically, it's better for me to see yellow and white or whatever color you want to use as opposed to green or red, because green or red is like, go, 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 go. You know, it's just, it can kind of influence decisions. So it might be an idea to change your colors as well. So aggressive buying, we broke the previous high. This is an all-time high. We broke to the upside and look at this. We consolidated above, okay? If this candle broke up and immediately came back down, it's not a break of structure. We then have to wait for another break of structure, okay? The point of this strategy is that you do this analysis on multiple different pairs. So you have multiple demands or multiple supplies that you can trade from, and you just set alerts and you wait for the price to come back, okay? So at the start of the week, I would have looked at 5 or 6 different pairs, looked at 5 or 6 potential setups, set alerts and waited for them to come back, okay? Again, these trades, I took all of them, okay? In my free Telegram group, all of the evidence is there. Me planning them beforehand. When I said before I was just about to get in, when I got in, showing the terminal with my trades in them, showing my profit afterwards, showing how much points I was in, it's all there. If you feel like I am not trustworthy or I'm lying about all this sort of stuff, literally just join that group. I say what's going to happen. I give my price targets. I give everything there before I do them. So All my receipts are there if you really want to suss me out. So we have an aggressive area of buying. The candle went up, it held above for a good period of time. Now we're looking for a demand zone. Demand zone is aggressive buying. Sell zone is aggressive selling. If this was in reverse and this is going down, we would be looking for a supply, okay? So how do we draw a demand zone? 15-minute or the 1 hour? It doesn't, like, the 1 hour demand zone is going to hold more weight than a 15-minute demand zone, okay? The higher the time frame, the higher the weight of those zones. But I primarily use the 15. I can also use the 1 hour. So I have a 15-minute example here. I also have a 1 hour as well. If we go back to the 1 hour, okay, the zones are normally a little bit bigger. So what you're looking for is you go to where the aggressive candle going up was, and all you do is look for the last red candle, because we're looking for buys, remember. Green candle, green candle, green candle, green candle, red candle. The last red candle on the 15-minute, you draw a box consuming the wick and the body. Some people just use the body, but I use the whole thing. And you drag it across and you wait for price to come back. So once you have that, so let's say you saw this happen. What a lot of people will do is they'll do this. They'll be like, oh my God, I have to catch the move. And they'll just be like this, you know. That's a breakout trading strategy. That's not what we're doing. We're waiting for pullbacks. We need pullbacks. Aggressive buying. We went all the way up here, okay? We have our demand zone. We are now waiting for price to come back. It has to touch into the zone, okay? So what I would do is I would get my chart out. I would place an alert and I would wait. That's it. I would wait. This could happen at 1 o'clock, 2 o'clock, 3 o'clock. It doesn't really matter. No, I trade this strategy whenever it hits my zone. Okay, I've done this at like 1 o'clock in the morning. I've done it at 3 o'clock during the day. I've done it in London session. I've done it in Asian session. Look, it just depends on whatever suits you. You can, some currency pairs and some indices might move differently, but it's up to your own back testing. Now I've done it on NASDAQ, US 30, the DAX, gold, a lot of the US JPY pairs, USD CAD, and again, it's just up to what hours you have to trade. The great thing about this strategy is you place the trade and you walk away. You place your zones, you walk away, and you just wait for your alert to go off, okay? But realistically, you would have this alert set on multiple pairs and then you come back to it, okay? So what we do is we set our alert, we go onto the 5-minute time frame, okay? Once the alert goes off, and we're looking for price to come into our zone and consolidate within that zone for a few minutes. That's all, okay? So you could see here, this would really annoy a lot of people, this bounce back, and because a lot of people would just aggressively enter this. That's not what we do here. We wait patiently. Patience. See dollar signs, you have to wait. Obviously this would have been a pretty epic trade, but it doesn't follow our rules. It has to go in and it has to consolidate within that zone for at least 10 minutes, which is 2 5-minute candles, okay? So it came into our zone. It cannot break the bottom. If it does break the bottom, remember I said about being wicked out. If it does break the bottom, but it leaves a big wick, do you see these things? See these things right here? These are called wicks. If it leaves a wick all the way down here, but the body of the candle, which is this, is still within here, I would still take the trade because it hasn't broken the zone. It hasn't closed outside the zone. If a candle closes down here, done. Move on to the next trade. Look for another demand zone through the criteria I just said to you right there. Wait for a high to break and wait for a pullback. Again, this is something that you might not have a trade every day. Last week I didn't have a trade on Monday because it was a bank holiday. Tuesday I did not. No, sorry, Tuesday I did. Wednesday I didn't. I was waiting for a pullback on gold. I got my pullback on gold on Wednesday. Thursday. I took the trade Thursday and I made over 1,400 euros on that one trade because I had patience. If I had taken multiple trades in between that, I don't know where it would have went. Because I had patience for the pullback into the zone, I was good. So how do I take the trade? 5-minute candle, haven't cracked the zone, I feel good about taking a trade. I will place an order right above the previous high, the previous 5-minute high, which is right here. My stop loss will be underneath the demand zone, and I target the previous high, right before the previous high. So previous high is here, right before the previous high. I don't go up here, I don't go right here. I usually give it some space, so like around here. I don't like doing this because you can see here, we came up, we didn't break the high. It could be a double top, it could be a triple top, whatever. So I always give it some space to ensure that if we do go up, is a high probability of hitting. Now, once you have your trade set up like this, you have your final take profit, you have your entry, you have your stop loss. Now we need to look for an area where we can take profit one. We need to take profit one. We need two take profits. Take profit one and our last take profit, which is up here, okay? So now that we get entered into the trade, we set our alert. We set one alert, that's right before our stop loss, and we set another alert in where we want our take profit one to be. So how do you determine take profit one? So we need to literally look left and look at an area where it consolidated and price hesitated. It should be very obvious. Very obvious. That is a very obvious zone, is it not? We had a tip here, it came down, tip here, came down, went up, broke through, it came down, and then it consolidated here again. We had two sections right here, so you basically have to look left and look at where price struggled. If you have one here, that's where your first take profit will be. So what do? You set your alert here. You set your second alert right before take profit one. What you do is you walk away. You turn the charts off. You don't need to be staring at it. If you stare at it, guess what? Guess what would have happened in this trade for 99% of you? You would have saw this pull up. You would have saw this come down. You would have been freaked. You'd be like, oh my God, if I take my loss now, oh my God, oh my God, oh my God, oh my God. You probably, 90% of you would have taken your loss here only for it to go up. Do not stare at the charts. If it breaks this zone, if it wicks you out, okay? Remember what I said, if it breaks this zone and does wick you out and it comes back within this zone and consolidates for another, use exactly the same criteria. It has to come back into the zone and consolidate for another 5 to 10 minutes. Place a breakout trade right above like I just showed you now and take exactly the same trade. If you get wicked out again, stay away. It's one of those days. Look for a different trade, okay? So once we get up to our zone, we take 50% of our trade out. If we're in for one contract, we take out 50%, half of the contract. What do you do then? You bring your stop loss to break even. So take profit one, 50% out, stop loss to break even, leave your trade run to final TP. That's it, okay? That is the first way of doing it. The second way of doing it, this is absolutely monked. So the second way of doing it is you trail your stop loss up. This is a more risky way of doing it, but you can get more profit this way. If you really feel like the trend is very strong, where you're not getting, it's a day where there's not many fake outs happening. If it's really strong market, it's really respecting levels. Do you know, some days where you're like, it's really respecting levels quite well, then it might be a good option to actually trail your stop loss up. So this is what you do. So instead of taking a TP1, okay, so you wait for it to come up to an area where you have determined where it could consolidate. Once it starts forming a bit of structure up here, you bring your stop loss right underneath that new structure, okay? So the lowest low was right here. I would bring my stop loss right underneath here, okay? Then what you do is you wait for the break up and create new structure. Remember, where do we determine our next take profit to be? It was up here, wasn't it? Okay? So we came all the way up, we touched that take profit, and we started consolidating again. All right, what do? We bring it right up underneath and we trail our profits up. We haven't taken any profit now. If you do it this way and it does go in your favor, you will lock in so much more profits because you're holding your full size the whole way. But you need strong trending market and you need it to respect your levels, okay? Now, you could have got wicked out here and it would have taken your profit and then that's it. You would have been taken out of trade, look for a new trade, okay? But in this scenario, and this was a trade I took, I did this exact trade I'm telling you right now. Go into my WhatsApp free Telegram group. It's all there. I think we got about 220 points in this trade. I trailed my stop loss underneath this. I did exactly the same here. There, no. When we came up here, I did the same here. I trailed it up here. Okay. We created a new structure. We had to break a structure to the upside again, which, what did it do? It formed a new demand, didn't it? Because we broke structure, we broke the new highs. Then we broke all the way up. This is a 15-minute new demand zone right here, okay? If we go on to the 15-minute time frame, we can see that this entire candle was a red candle. So this is a new 15-minute demand. What do? I place my stop loss right at the demand. We came all the way up. We created a new structure here again. We had a pullback. What do? We bring it all the way up. These are all 5-minute candles now, okay? You want to trail it on a 5-minute. We came all the way up again. We had a pullback. We started going up again. What do we do again? We put it underneath and we trail up. I eventually got taken out of this trade around here, okay? And that's how you trail up your stop loss. And the last way of doing it, this is the riskiest way, but it's also the most rewarding, all right? So I've shown you the easiest way. Easiest way is this. Place that trade, walk away. Set your take profit 1, set your take profit 2, take profit 1, set your stop loss to break even, leave it run to take profit 2. Second way of doing it, trail your stop loss underneath the structure as it creates new higher highs and lower lows on a 5-minute the whole way up until you eventually get stopped out. Okay? The last way of doing it, and this is the most experienced, and it's honestly something that I wouldn't do until you have this down. Okay? You want to have a good record of getting this right before you do this scale in method. Okay? This method is how I've been able to bring my account up so aggressively quick, is because I've been adding to trades and I've been minimizing my loss the whole way, okay? So let's use this exact trade as an entry again. We entered here, it went up, it formed new structure, okay? What do? I bring my stop loss underneath the new structure. At the same time, we're creating a range, okay? When we break out of that range, we take a new trade. Exact same risk as your first trade, okay? So if you're risking 100 euros here, all right, you're risking 100 euros. But remember, we're in profit up here with trade number 1, all right? In profit, trade number 1, we've secured this profit. Now, we place a new trade right at the breakout of the consolidation, okay? Excuse me. Right at the consolidation break, we put our stop loss at our stop loss of our first trade, which is in profit. Remember, trade 1 in profit and our stop loss is right here. Our new stop loss for our second trade is going to be right where our first stop loss is. And our trade is going to open at the breakout of the consolidation, okay? Now, we do the trailing method again. Now, when I'm adding to a trade, usually the maximum I'll do is 2 adds. Over that, you're pushing it. But this day I did add twice. Again, receipts are in the Discord group, or sorry, the Telegram group. So now that it's come up, what do? We formed a new structure, okay? So now we have another structure forming right here, okay, don't we? We came up, we consolidated here. Now what do? We bring this right up underneath the new structure, okay? Now that we're in profit with this second trade, we bring this second trade stop loss up to match this one. Now we've guaranteed we're super safe with our first one, we're in profit. The second one, we're in minor profit, but we're safe, okay? Our stop loss is at the same point underneath this new structure, because up here now you're gambling with time. Like, this could just fly down. Well, you're not really gambling, but this could fly down or it could fly up, okay? But you've locked now in, you're safe. You have to make yourself safe if you add to a winning trade. This is adding to a winning trade and you have to be safe. Do not do this. Do not do this. Do not do this, okay? First trade is like this. Second trade is like this, okay? Which means that you haven't locked in profit here. You've created new risk for yourself here by adding into the trade, and you've locked in nothing. If this comes up here and flies down, you get taken out of 100 euro here. You get taken out 100 euro here. You have to lock in profit. So remember, new structure forming, first trade underneath the new structure, new trade, break out of that structure. Stop loss is where this stop loss is going to be. In profit, this is risking 100 euro. This now is not risking anything. You're in profit. So they actually cancel each other out, or whatever you're going to be into. New structure forming. Last time you're going to add once more when you break this new structure. What did I say? Bring your first trade into more profit underneath this new structure. Bring your second trade into small profit. Same exact place. Third trade, stop loss is going to be right where this one is, okay? So now they're all in line. Big profit in first trade, small profit on second trade. Third trade is a brand new trade. It's technically in negative right now, but a second, if it breaks out again, you trail it up. You just literally trail it up the same exact way, but you're doing it with 3 trades now, okay? Again, if you do not believe that I do this myself, join my group. All the receipts are there. I prove everything. I'm completely transparent. All statements are there, okay? So what do? I said, remember when we broke up here, we created new demand. Now you can bring the stop loss for this one underneath the demand, stop loss for this one underneath the demand, stop loss for this new trade underneath the demand. Tiny risk now on the third trade, big profit on first trade, bigger profit on the second trade. Now we come all the way up. We formed a new structure up here. First trade, stop loss now is here. Second trade, stop loss is here. Third trade, in profit, stop loss up here. Huge profit, super small risk, 0 risk. But now you've taken on 3 times the amplified profit, okay? My profit on this trade should have been 500 euro if I only used my first position. But because I added 2 more positions, I brought that 500 euro trade up to over 1,100, 1,200, because I secured my risk the whole way up and I added to a winning trade, okay? And obviously there was another structure forming here, so everything was up here, okay? All my risk was up here at this point, and then I got taken out, and again my profit is inside the Telegram group. So now I've shown you the 3 ways I enter trades, okay? I hope all that makes sense. Obviously this is one example. We have another example here, okay? I won't keep you here much longer. I know this is a very long, this is an example of an entry I wouldn't have taken, because what did I say? It has to consolidate in the zone. If it goes in and flies out, it doesn't count. So here we go. We had a 5 minute, we came in, we flew out. By the time I saw this trade, we were actually up here. So I was like, nope, has to consolidate in the zone. That's it. You can see here we broke through the zone, okay? Candle closed underneath it, trade gone. All right. Now, I will always say, if there is a demand zone that you've traded from before, always drag it across, because we could revisit it again. Now, a lot of people in this position would start looking for sells. But if we go on to, what did I say, the 1 hour? This is that pullback. We bounced off the 200. We didn't go below. I'm still looking for buys. So I need the top to break and form a new demand again. What happened? We broke the high and we started to consolidate. So what did I say was number 1? You have to make sure that there's no news, because the day before big news, like red folder news, we can have consolidations the previous day. Look what happened that entire day. We did form a new demand on the 15 minute when we broke this structure, but we never had a pullback. We had literally, again, we have to be very careful. If there's big news happening for what you're trading the day beforehand, there normally will range. The next day, if the news is good, it will start going up over time. If the news is bad, it could go down. But don't trade off the news if it's good or bad, because a lot of times it can do a different thing, okay? Now I'm going to show you an entry in a 1 hour demand. This is the last one I'm going to show you. So we had good news that day. Look at that crazy spike. We came down. What did we do? We broke structure to the upside. I was looking at the 1 hour that day. We came up. We broke structure, we came back down, okay? We formed a 1 hour demand. Remember what we do? Big candle, we go back to the last red candle, we completely enclose it, we go on to the 5 minute, we wait for it to be tested, we need a consolidation for 5 minutes, and then we take the trade, okay? So, the way I took this trade that day, again, right at the break, stop loss at the demand. And this day, again, the way I trade is I always add to it. I showed you the other methods, and you should do the one where it says take profit 1, move your stop to break even, and target the previous high. That's what you should do until you get used to this. Once you get used to this, then you could maybe try the trailing up method. Once you get used to trail, like for instance, that's what I did with this one, but I also added to the trade as well. Again, that's how I've been able to multiply the account so quickly. It's not because I'm risking too much, it's because I'm adding to a trade. I keep adding to a trade. So instead of making 200 or 300 euro, I'm making 500, 600, 700 euro. But I'm securing my risk as I go up, okay? So I took this trade again, all the receipts inside the group. We came back, perfect entry. We had a really nice consolidation. We never went underneath. If we did and left the wick, I still would have entered, probably would have been stopped out. But again, remember, 2 tries. If it doesn't work, we broke above, I entered a trade. What did I do? I marked out my zones like this. Okay, I marked out my zones like that. Again, area where the price hesitated, area where the price hesitated. So all I did was this. I did this. Okay, set my alerts from here and here, and when I came back here, I looked and I was like to myself, right, we're in a strong trend. I want to be adding to this. I don't want to be taken away. So I did what I said in the last entry type here. We had a consolidation here. I moved my stop loss underneath here for a small loss if it happened. I placed my trade like this. Oops. I placed my trade like that. My stop loss now was above my profit, so I was in a very small profit on this trade. I added right here. I had my stop loss right at my new stop loss for my first trade. I had my take profit up miles. I waited for it to consolidate at the next zone, which was actually, whoops. I waited for it to consolidate. It was up here actually, because we didn't get a really good pullback here. So what I did was I brought my new stop loss all the way up underneath this wick. Again, because it was new structure forming, and I entered a new trade at the break of the structure here again. Again, stop loss at where these stop losses are. Again, you've locked in your profits. You've already locked in huge profits at this point. And what did I do? I trailed this the whole way up. I think this was Friday as far as I remember. I have, again, all the receipts are in my WhatsApp or my Telegram group. And if you are thinking that none of this is possible and that I'm doing all this in hindsight, I'm not. All my trades are inside my group, okay? And I did the same thing. We came down, we created a new structure. What did I do? I brought this stop loss here, and this was the new lower low, so I brought this stop loss up here to reduce my risk. I brought this up, and what did I do? I brought it up here. I trailed it up again exactly the same way. This trade now was in profit. All 3 trades are in profit, and when you're in this position, yeah, this is exactly how it worked out. See, look, we didn't break the lows here. We created a new demand here because we broke structure to the upside. One last thing to say is that when you are in a trade, you can start using 5-minute demands. Use exactly the same method I showed you on the higher time frames. Break a structure to the upside, okay? Again, I'm just going to show you an example here, all right? Only when you're in the trade. You don't use this now to trade from. You use this to either add to a trade or add to a trade or trail your stop loss up. You have to use the demands on a 15-minute and a 1 hour to enter your first trade, but you can use these once you're in a trade, okay? So look, we had a break of structure to the upside. We created a new 5-minute demand. We're in a trade. We're allowed to use 5-minute demands in a trade. So last red candle, we created that, and basically I put my stop loss for all 3 trades underneath the demand here, okay? We had a big push up again. We came down, we pushed up, we came down, and when we came up here, I brought all trades, okay, all of them right here, and I was stopped out basically at this point. Receipts again inside my group. I think on that trade it was up to, I think it was like a €1,300 trade on that one, or 1,200. But that's essentially what we do. Everything is obviously in reverse if it is going to be a short. I know this has been a super long video. If you want a quick look at what you should be doing, maybe it might be an idea to write this out yourself. I've given you loads of examples now. 3 different methods of taking profit. Again, the method where you just set and forget, profit 1, profit 2, break even. I've showed you how to trail your stop loss up, staying into one trade, but trailing your stop loss up and only taking profit when it hits your stop loss, okay? As in when you're bringing it into profit. And the third one, which is a super advanced, is adding on each consolidation on a breakout of each one. Very advanced. Do not do until you master the 1 and 2 ways of doing it first, okay? So that's pretty much everything when it comes to the strategy. Thank you so much for watching this video. Again, if you really want to watch a series, there's going to be probably a few different types of people that want to join. The haters that don't believe this, that feel like I'm going to fail. The people that are really excited to become day traders. They really want to make this work and they want to see what's possible. You guys are awesome. And also the people that are just super skeptical and think this is a complete gambling thing, which is in reality ridiculous. There are such things as professional hedge fund traders, which are doing the exact same thing I'm doing, but just on a massive scale. It's only a scam, and it's only gambling if you make it that. Okay, so again, if you want to use the broker I'm using, the best bloody broker for personal accounts, TD365, it's in the description. If you want to use my trading journal, which again, either use this or use Excel. Have a trading journal. You need to know your stats. Knowing things like I am really crap at trading at these times or at these days are super good information. If you've never made profit on a Monday, don't trade on a Monday. If you've never made a profit on a Friday, don't trade. But how will you know that unless you track it? So either use Excel or use TradeSync. Again, link is in the description. And if you want to join the free Telegram group and watch this journey, if you literally want to shadow me and figure out what trades I'm getting into before I'm getting into them, and you know, learn how I trade excuse me, learn how I trade even more. Now that you've seen the strategy, you'll be able to see and implement what I actually give you. So I will be giving you levels in the free Telegram group, and it's up to you to apply the strategy I just gave you. Okay, it's completely up to you. So you're going to be learning as opposed to being spoon-fed. Okay, so yeah, thank you so much for watching. I know this has been an extremely long episode, but if you're watching it to know, you are a champion. Okay, what I want you to do in the bottom, okay, I want you to write down something random, All Might. Why? Because that is my mug that I have right now. I'm a big fan of that anime. Type in All Might into the comments, because I just want to confuse the hell out of anyone that hasn't watched it. Okay, watch the full thing. So thanks so much for watching, guys. Make sure you subscribe to watch this journey. It's going to be a good one. Wish me luck, and let's make some money.